Greetings everyone. The new tax law 2025 and how it affects you or your business. As a business owner or a taxable adult, you need to know how the new tax law will affect you or your business. Here are the major effects. Number one, no individual or business can evade or dodge tax under the new tax law anymore. This is because banks have been legally mandated to send quarterly reports of all inflow and outflows of all bank accounts, corporate or personal, to the tax authorities under the new law for individuals and companies whose monthly inflows exceed VAT and company income tax thresholds, respectively. Number two, if your business does not meet the annual turnover threshold of 50 million, that is about 4.1 million per month, you need not to pay VAT. But you and I know we pay VAT on our everyday purchases, especially those related to business. For this reason, we advise you register voluntarily for VAT and do nil filing even if you are not within the threshold for now, so that whenever you begin to meet the threshold, you can claim input VAT to reduce your output VAT. This is one of the legal ways you can avoid paying too much tax. We call it tax avoidance techniques. The rate of VAT, however, remains 7.5% under the new law. But note, however, that VAT is an indirect tax, that is consumption tax. Therefore, you must add it to your product price or service charge. Otherwise, your profit margin will be eroded, except you have enough buffer margins. Number three, small companies whose annual gross income is less than 100 million are exempted from paying company income tax. The rate of company income tax remains 30% of taxable income under the new law. Number four, companies must remit pay as you earn payee to the state under the new law. All employees earning annual gross income of above 800, that is about 67,000 monthly, must register and remit payee to their host state or the tax authority within their area of business operation. Number five, individual and directors of registered businesses with annual gross income as per 4 above must register and pay personal income tax as well. Number six, the e-invoicing fiscalization system. Now, this is the major change of that particular new tax law. What this means is that all VAT or all VAT registered businesses are required to adopt the e-invoicing system. This has already started in phases anyway. So if your annual turnover is above 5 billion, you ought to have joined the system already. It started from 1st August 2025, and the extended deadline for full implementation is 1st November 2025. While businesses with annual turnover of less than 5 billion, those that are classified as small and medium-sized businesses, are expected to key in from January 2026 under the new tax law. What does this mean? Firstly, what is e-invoicing? This is an electronic invoicing system in which sales invoices or transactions of a business are electronically reported in real time to the tax authorities via the FED's approved e-invoicing platform. Secondly, your business processes must be digitalized and automated via accounting software or enterprise resource planning. Thirdly, the era of not disclosing your actual invoice sales is over. And also the era of manual business recording is now no longer advisable for businesses that are within this VAT threshold. That is to say, if you are meeting the VAT threshold, which is 50 million and above per annum, you must digitalize your business operation. You must deploy the use of accounting software under the new tax law. 7. Under the new law, tax 6, especially company income tax and personal income tax, are now assessed on current year basis, CYB, instead of the old preceding year basis, PYB. This means that tax of 2026 will be based on the income of the same 2026 instead of income of 2025. You understand? Usually in 2026 you pay income of the previous year, but this time it is that same income for that year that will be paid. This further entails that the income of 2025 will now be taxed alongside income of 2026. For instance, if your income for this year 2025 is 5 million and that of 2026 is 7 million, your taxable income for 2026 will be 12 million. That is 5 million plus 7 million. Though the tax authority may allow for proportionate spread of your 2025 income to reduce the burden. So be ready to pay tax on 2 years' income come 2026, since the 2025 income was not taxed under the old system. This is called transition adjustment. Number 8, under the general offenses and penalties section of the law, a taxable person who fails to register with the relevant tax authority is liable to 50,000 fine in the first month and 25,000 naira for each subsequent month of default, while failure to file returns attracts 100,000 fine plus 50,000 monthly for as long as the failure continues. Failure to process taxable supplies through the fiscalization system is 200,000 plus 100% of the tax due and interest at prevailing CBN rate, while false declaration, forged documents, etc., attracts 1 to 2 million naira or possible imprisonment of up to 5 years. The list of penalties goes on. As stated earlier, there is no hiding place under this new law. So we are all advised to begin preparations by engaging the services of tax or account professionals like FinFast Pro Solutions to do the following for you. A. Set up and implement accounting system for invoicing enablement or integration. For e-invoicing enablement or integration. B. Help you arrange your tax affairs in such a way that you pay less tax by deploying legal means to reduce your taxable income. C. Organize your business information and documentary evidences to support your claims when necessary. D. Regularly prepare and file your returns in due time and help you remain compliant to avoid paying false fines and penalties. And E. Provide other professional advisor services. For more insight on this and service fees, contact FinFast Pro Solutions on the number showing on your screen. FinFast Pro Solutions, protecting your business.